Hi there, I'm Ross Woodfield. Welcome to Blackwell Global's daily market update. Starting off in the US, and the dollar lost a bit of steam leading up to the FOMC meeting in just over 12 hours. US CPI figures were released and were disappointing for the market. The CPI figures, which were considered the last piece of the puzzle for the Fed, missed estimates across the board, with core CPI dipping lower to 0.1% month on month versus 0.2% expected. We believe the Fed will have a tough time in justifying a rate rise, but there is a real chance that they will push ahead with the rate lift-off regardless, given the need for a bit of a buffer if the economy deteriorates. Looking now at the pound, and it surged ahead over 150 pips thanks to a better than expected unemployment rate, which fell from 5.6% to 5.5%. The market overlooked the slightly disappointing claimant count figure, which ticked higher to 1.2k from negative 4.9k. Wage growth improved to 2.9% year on year, which gave the cable traders something to be bullish about. And further compounding the bullish sentiment was a speech by Bank of England Governor Mark Carney shortly after the wage figures. His stance was slightly more hawkish than expected, so we may see the bank act sooner rather than later on rates. And turning now to oil, and it caught a solid bid overnight thanks to the weekly inventory figure. The Energy Information Administration released their inventory report, which showed a solid draw on stockpiles of 2.1 million barrels. There is still a large glut of oil, but this will give the bulls something to cheer about, especially heading into the refinery shutdown season. This is the time of year when refineries go offline for maintenance before they switch to refining the winter grade fuels. And this usually leads to a solid build in inventories, which may eventuate later this month. And finally today, our analyst advice for the day is to sit on your hands and keep your money on the sidelines. The FOMC is due to set interest rates later tonight, and the volatility could be fierce. The market is not certain about which way the Fed will go, which will lead to a solid move one way or the other. And this is the most important Fed meeting for the last 5 years, if not longer, so enjoy the show. That's all we have time for today. For Blackwell Global, I'm Ross Woodfield. Thanks for watching.